Welcome everyone. The topic of the day is KPI measurement and analysis. We will talk about the measurement of key performance indicators and the of the metrics that is basically present. So, as in a business plan, we all understand that it has to have essentially a mission and a vision statement, a product and a service description that the organization wants to be in, a proper analysis of the market, the management descriptions, the marketing plan thereof, the opportunities and challenges, and the cash flow and the revenue projection. So these are essential element for any business plan. Even if you want to launch a business, if you even if you want to analyze a running business, an operational business completely, you need to understand the very reason for its existence through the mission and the vision, the product or the service description that it is going to wants to be in, the analysis, the market analysis, the management description, the marketing plan, opportunities and challenges thereof, and the cash flow statement. So essentially, what are we looking into it? Number one, it's the location, selection location, or the location where the business has been planned around it. What kind of operation that we are looking into it? Is it going to be a franchisee mode? It is going to be a company held business? Is it going to be a shareholder? Is it going to be a privately held business? So business registration comes into play. The financial implications, the finance recordings, the auditing of the finances, where it has to be done. What are the tax liabilities that needs to be spoken around it? Because based upon these things, the fund might be arranged, or it will be sourced from the lending agencies altogether for the business. So business funding has to be spoken about it, the employees of the business, the sales and marketing, and the taxes thereof. So this is what we are looking at it. The business plan we need to understand. So as for the business plan, the other essentials are equally vibrant and equally essential. So key KPIs, basically the indicators which tells me as to what we are looking into it. So we are trying to measure everything as far as what the how well or bad we are doing it. In case if we are not doing, or even in the case if we are doing good, can we innovate it for a better performances and propagate it to a higher echelon as far as the profitability of the firms is concerned. This is what we keep on strategizing, and then again we start with back with the measuring as what we are doing good and what we can be improved upon it. Essentially, key performance indicators is a business metric to evaluate the factors that are crucial for the success of an organization, and these are what we are looking at it. These are the essential part that we go about every now and then. So we will speak about the KPI indicators altogether. Is what are they? Number one, please understand they are quantifiable, they can be understood, they can be felt, they can be replicated, they can be enhanced, they can be improved. These are quantifiable, measurable terms, and probably are also actionable, as I said. So measure the factors that are critical to the success of the organization in terms of market present, in terms of market revenue, in terms of profitability, in terms of liquidity ratio, and so on and so forth, tied to business goals and targets. Limit, always limited to 5 to 8 key metrics. Remember, beyond this there might be many metrics that goes around it, but in case if you want to improvise upon it, if you want some actions to be taken around it, it is always better that if we can limit it to a certain numbers of metrics that has been present out there, applied consistently throughout the company, is what we are aspiring. Types of KPIs. One, they are operational and productivity based. Next would be financial based. Third would be human resource based, and the last but not the least would be your marketing based. So what are we talking around it? We are talking about operational, we are talking about financial, we are talking about people, we are talking about the marketing part. So these are things that needs to be taken care of every now and then. These are the four metrics that is very pivotal to the success. So what can they include? They can include the weekly revenues. Yes, they will be including the sales call, the proposal of the businesses, the closed business that we go around. There are certain parameters that needs to be hived off. The customer satisfactions, the accounts receivable, the utilization capacity, and the errors thereof. See, this is the dashboard that I've given it to you for your reference. A small dashboard which tells us of a particular company as to what are the parameters they are doing which are not doing good and which are being improvised upon it. So we need to go around it. It might be based on a strategic business unit, based on a different location, and the performances which can be replicated elsewhere. So let us come up with an example. Number one is a billability or the service organization, right? So what do we go around it? As for a billable hours that we are working around versus vis-a-vis the standard number of hours that is required to be worked on a weekly basis. So average transaction time minus the total sales per week or month into the number of transactions that we go around it. What is the average transaction price? Is the total sales which needs to be taken care of. This is what we have to build upon it. We need to understand what is my average transaction time. That's the total sales per week or month divided by the number of transactions that comes around it. So if my sale to average transaction, if the total sales is $100 and the number of transaction is 10, so the average transaction price would be somewhere around 10 only, right? So this is what we are talking about, the average inventory. Average inventory is supposedly is equal to inventory in dollars by the sales per month or a quarter, that in terms of dollar. Let's say you're currently shipping around 25 pounds per boxes. For a typical customer buys around 50 all pounds. If you ship 20 boxes in a month, the cost is a $468.6, right? So that is what we are looking into it. What is the average cost? It works around approximately $24.33, as the case might be. So if you instead packing about 50-pound box, that is the average purchases that the customer buys around it. If we can send 10 50-pound box instead of at the cost of $407.2, your average cost per bulges up to $40.72, and the overall shipping cost comes down by $61.4. So this is what the parameters that need to go around it as far as your KPIs are concerned. This will tell me everything in numbers as to what is preferable or preference mode of shipping the bolts. Or let us understand the financial abilities, right? So what is financial is a measure the rate at which a company can pay off your suppliers, your vendors, that who are giving resources, giving materials, giving raw products altogether towards a company. So accounts payable in terms of days. So you might be paying them within a day, within 7 days, within 2 weeks, within a month, or within 1.5 months. As a 45 days period that goes around it. So measure the rate. This is what will tell me if you can pay it immediately on a daily basis or on a weekly basis. This it signifies that the health of the company is very pink and very vibrant. Whereas the measure the rate at which you collect the outstanding accounts. Now, similarly, you must be also producing something from your company, and you are also selling your products outside the company altogether. Might be you might be a vendor to a bigger company, or you might be giving out to a retailer, wholesale agents. So how are you collecting those the rates? So account receivable in terms of days, it is in 7 days, is it on a daily basis, in 15 days, is it on 45 days or 30 days notice that goes around it. So this, there has to be parity around it. It shows your presence, your requirement. Next is measure how effectively you generate profit on each of the dollar margin revenue that goes around it. So you need to understand this thing collect in totality. So example, average item cost, what is it? The staff sales payroll per day divided by the number of items sold per day. So it's a number, it's a dollar cost in terms of your salary probably per day, and in terms of a sales that has been happening around it. So that is what we are looking into it. So sales staff, it is the salary that we're going about the payroll. See, payroll in dollars and the number of items which been sold as in on a day. So which we will tell up will give me exactly what is an idea of the people cost that goes around it. The quality check, you look at it in this particular pic, a wonderful, a pretty little child having an ice cream. So number of defects per individual in a given time frame. The time frame can be decided as on a quarter, a monthly, or an annual basis, vis-a-vis the average allowable time of defects for all performing the same job in the same time frame. This is what we need. Let us understand the marketing component with a little bit of an example. First is lead to close ratio. So you have a lead generated on day one, and you probably close that sale at the end of 15 days or at the end of 6 months. So this is the lead time that we are speaking around it. This is vibrantly the lead time that we suppose between lead, the start date, and the end date. So the cost of customer acquisition, you need to understand both in terms of expenses and the time incurred around it. The website and the social traffic to lead the ratios, this is what we are looking into it. What are the effort that needs to be pursued upon for the customer to close that deal altogether. Lifetime value of a customer, it's a revenue into gross margin into averages. So what is your revenue into what is your gross margin multiplied with the average number of repeat purchases. This is what we are looking into it. Lifetime value of a customer is equal revenue into revenue times gross margin times average number of repeat businesses. Remember, we are always interested in repeat businesses. Definitely there are also one time purchases that happen, so which is better? I still repeat businesses. We have to make a little less effort to have those conversions. So exactly why are KPIs important? Number one, it tells me a trend. It tells me average cupcake sold. It tells me measuring dailies, weekly help, prediction sales for requirement. It tells me the cyclic nature of the sales or the industry that comes around it. It helps me in improving decision. Remember, it's a billability by week, billability by day, indicates too many, too few staff, and so on and so forth. So that will tell me the overall head counts that the company is going to having it. So then comes the alert when something goes wrong. What it is if the inventory is going down, it tells me out down. Absolutely, it will figure it out. The moment I see with my KPI, the dashboard will tell me what is the inventory items that is missing. So basically, there are six steps. The steps goes like this way altogether. The first and foremost thing is tying of the goal. This is what we are looking in. Tie up the goal as in state your objective. Know your drivers onto the business altogether. We have to ensure meaningful KPIs that comes around it. The meaningful KPIs ensure the measurable KPIs. So first and foremost thing is the meaningful KPIs that we look into it. The second one would be a measurable. Can you measure it? Remember, anything and everything that can be measured can be improved upon. Similarly, set the measurement guidelines there, as in what by what dates you want to finish it up, and establish a proper system of tracking the tools thereby. These are the things that is very essential for creating KPIs. I again repeat, first step is to set up your goals, second is to understand your drivers in the business, then comes the two wonderful steps of having a stated meaningful KPIs and measurable KPIs. Once you have done there, you need to just set the dates and the time duration, what you're going to go around it, and establish a proper tools to create KPI. So let us visit those six steps altogether. What are the goals that we are looking into it? Are we looking at market revenue? Are we looking at market presence? Are we looking at brand building? Pick anyone and look into it. We can have something called increasing the profit by 10%. That's profit is equal to revenue and expenses into it. Know your key business drivers. Who are they? Who are it? Is it your customers? Is it your employee? What are the defects? What are the brand name? What are the cost of the goods sold? Is your competitors doing around it? What is your prices and sales force cost? That so ensuring meaningful KPIs, how do you go about it? It is controllable, it is utilizations, it is defects, it's the cost of the goods, it is your price, the sales for cost that goes around it. Now, this means you will have a proper balancing act that needs to be done. Probably it will tell it to you whether you have a bulging, whether your inventory is bulging, whether the number of defects are increasing or getting reduced, what are the cost of the goods that has been sold, the average billable price, the ticket price, or the billable price that goes around it, the sales for cost, the non-controllable cost, in the sense of your competitors. Or competitors, what they do is beyond your together. We come to the fourth steps, which is measurable. I have already stated anything and everything that can be measured can be worked upon and improved upon. Example being a rental company tracks a day of an asset is available versus the actual day rented altogether. So you can have a productivity issues around it. We cannot have 100 trucks and probably only 10 billable days in a month. So that means we are making a choice of not doing a wonderful job altogether. So this is where we can have only approximate 10 or 11 trucks if there is only 10 workable days in billable days in a month that goes around it. So that is what has been meant by utilizations altogether. Then comes a defect. It is an example number of repair workers needed in a software development or manufacturing. This is where we have to work upon it. In terms of defect, it is the Six Sigma impact that can actually show whether your company is having quality manpower, quality process, quality resources at your disposable, and determine the work We come to the fifth measurement, that is based on your time duration, as in the dates are concerned. It is all about being early, weekly, monthly, quarterly, semi-annually, annually. Depends on the sensitivity of making the changes. How can you go across with it? You have to keep a track. If you're working in a stock market, that would be on a minute to minute basis. If you have to work in a metal sectors where the rates of the metals are changing, it have to be met on a early, or should I say daily prices. On a weekly basis, there would be other material like coals and things, like which changes on a day to day, on a week to week basis, on a monthly basis. The outcome of a finished product of any material for that matter might change with every batch being produced, and similarly stated for quarterly, semi annually, and annually, as the case might. So establish a proper tracking tool. This is what we are looking into it. The right system, the right processes will ensure you will coming at the best end of the result. It should be timely, it should be accurate, it should be trended, and it should be easily understood by anybody and everybody. And when I say anybody and everybody, I am referring to the stakeholders, because this will let them know, this will actually tell them no, key your datas, your key performance indicators, how good, well, ugly you people are performing as far as the organization is concerned. The timely production of certain KPI indicators would help you to assess and take appropriate decisions, the accurate thing that across it. So we need to understand this KPIs, as in when to measure. It can be on a time of the year, it can be annual basis, it can be a sales cycle basis, maybe on the basis of the seasonal. The economy can also tell it to you, and any action that you can want to take in terms of changing of the process. And there, with this, I come to an end of this presentation. Thank you for watching this video.